Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a great day. Let's take another look here at Bitcoin, see what's going on. Apologize in advance, I'm not feeling super awesome, and the babysitter called out today, so I'll have to kind of keep it short today. But simple way to understand it here is that Bitcoin is still working its ascending channel. We got to presume that'll continue until it doesn't. We're remaining above our $104,000 support here based on that local point of control. So let's take a quick peek at the back end liquidation data, just kind of get perspective where we're at. If you could, always hit the like button, comment below, and don't forget to take advantage of this nice deposit reward bonus and a Model 3 Tesla up for grabs here for Bitunix. So awesome stuff there. Congrats on those who are qualifying. So when we take a look here at Bitcoin, we will recognize, first of all, we're kind of still in the middle of that range. So we got 102 to 99,000. We talked about that yesterday, being that lower range. But there's a heavy concentration between 107, 108 that wasn't fully hit here recently with this potential double top. So the best way to understand this is that it's too early to tell. If we get closer to 107, it's probably safe to presume we'll see that 108K sweep. But between now and then, we want to pay attention to liquidation delta, which is pretty obvious here. We have a lot more longs than shorts in the market. So there's 6 billion more longs versus shorts currently at this point. So we had this dynamic shift ever since closing above that 104, 105K range yesterday, and essentially just kind of incentivizing the price to go higher. Now, this is kind of a weird, tricky place in the market because honestly, I don't love trading these kind of situations just based on the simple fact that it's hard to really tell. Like altcoins are on like a razor's edge, they're ready to drop at any minute, but Bitcoin has a lot of support and resistance in this zone too. The longer we accumulate in this range, the more likely we are to go higher. So there's a lot of reasons why we should go up, but it's hard to say specifically. I'm not going to try to, sugarcoat it and say like, I love where we're at right now. This is just it's not the best, most optimal situation because we're kind of in a very unique place. So the simple way to understand it here is we got 105.3. I mentioned this here recently. That's that local point of control, basically that open interest area, essentially just telling us that we're not in great shape here as far as, if we close below that, that's still considered to be a resistance for us. But we're right there at that range. Difficult to say. The key takeaway here is on the daily time frame. When we talked about this yesterday, we are still on a very bullish type of track. And at this point, honestly, it does feel like we're probably going to continue higher up. But once more, liquidation is still below the price action. So, okay, let's take a quick look at just some basic data here and kind of see what that tells us instead of speculating too much, because it's hard to really say when you're in these kind of ranges what's going to happen next. So when we look here, we're at like 70 on the RSI. We can see stochastic swinging down, and we can also see the money flow index is low. So these are all like not great signs here. These are basically divergent type of signs letting us know that further downside makes sense. Same thing here with the daily time frame as well for the MACD. So for the most part, daily time frame outside of the moving averages being below the price do indicate further downside is likely. Okay, so that's kind of an overall sentiment there. Now the 4-hour time frame is probably going to tell us something different here. We've been able to maintain above 50 in the RSI. We're right there with stochastic kind of swinging down on the money flow index right there with it. These are very very difficult signs here to try to trade into. In other words, they're conflicting, and they tell us like there's a lot of different things kind of happening right now. So overall, I don't really like what I see here. If we take a look at the hourly time frame, we can recognize too as well that we are above the cloud for the moment. So this is generally favorable. So as you can kind of see, we have a lot of conflicting information. Smaller time frames do imply we may see further upside, but they're kind of indifferent. And then the daily time frame kind of telling us we're going to go down. So I typically like to trust the macro in situations like these because I think the overall sense here is that we do pull back at least for a short-term correction to once again that low $100,000 to $99,000 range to sweep this liquidation level. So that's kind of my thoughts there. What are your thoughts? Why don't you comment below? Love to hear it. We'll look forward to seeing you all in the next video. Thanks again so much for your time, and take care of yourself out there. Bye-bye.